Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
For this session, we're going to look at liabilities. At the end of the lesson, you should be able to give examples of the different types of liabilities. And we begin by looking at the definition. What are liabilities? Liabilities are basically debts of the business. These are money owing by the business. So therefore, liabilities are amounts owing for goods and services supplied to a business, expenses incurred, not yet been paid for, and the final thing there, money borrowed by the business. So in any of these cases, then of course, there will be a liability or possibly liabilities. Now let's look at some examples of liabilities. The first one there is creditors. Creditors is also known as trade payables or accounts payables. Creditors are individuals or businesses that the business owes for goods or services supplied to them on credit, right? So they are owing these individuals. They trust some items from them and they have not paid for them. So once they have not paid, then it means that they are owing them. So creditors are persons that the business owes for goods or services supplied to them. It is not just a person, the business could be owing another business. That business that the business is owing is a creditor. Another example is loans. Think about you borrowing something from someone. Once you borrowed from someone, then of course you'll be owing for it. At the business end, once the business borrow that loan, then of course they'll be owing, the business will be owing. So therefore, the amount owing for that loan is a liability. So therefore, loans are liabilities. Now, there are different types of loans. You could have bank loan. Bank loan in the sense that the business had borrowed that amount from the bank. You could have the business borrowing loan from another lending agency, possibly a credit union, etc. And there are different lending agencies. Okay, but once there is a loan, then that is a liability because you have borrowed, the business has borrowed and is now owing for something. So once it is owing, it is a liability. Another example is mortgage. Mortgage is a loan that is taken in order to acquire property or properties. So therefore, the business will be owing for this. We're now going to look at the categories of liabilities, the types of liabilities. And there are two broad categories. We have long-term liability, which is also known as non-current liability, and we have current liability. How do we distinguish between the two? Long-term liability, the repayment period is more than a year. So once you have more than a year to repay this amount that is owing by the business, that is a long-term liability. While the current liability, payment must be made within the 12-month period, so within the year. So therefore, that is a current liability. Current liabilities are items that have to be paid within a year, while the long-term liabilities are items that have to be paid more than a year. You have more than 12 months to pay this amount that is owing. Now, let us classify those examples that we have looked at earlier. The first one there is loans. Loans are classified as a long-term liability unless a part of that loan is due within 12 months, within a year. Once that amount is due within the year, then that particular value is classified as current liability. Or if the loan, the entire loan itself is repayable within a 12-month period based on your checks, then that is classified as a current liability. Another long-term liability there is bank loan. The mortgage is a long-term liability as well, because definitely, of course, mortgage, that is usually repayable over a long period. So therefore, it is a long-term liability. For current liabilities, we have creditors. Creditors, whatever is owing to these individuals must be paid within the year. As a matter of fact, a business would want to repay whatever they're owing to the creditor in the shortest time possible because they want to maintain that relationship with that creditor. Other current liability, we have bank overdrafts. Bank overdrafts are where a business is allowed to pay more out of its bank account than the total amount it has deposited in the account. So if they have withdrawn more than what they have in that bank account, the extra that they have withdrawn would be classified as bank overdraft. And in this case, the business would be owing the bank that amount, the extra that was withdrawn from what they have deposited in the account. We have as well accruals. What are accruals? Accruals are expenses for which the benefit has been received, but which has not been paid for by the end of the accounting period. So therefore, it is owing. So for example, you have electricity of $10,000 for the period. However, the amount that was paid was 8,000. There's 2,000 that was not paid. That 2,000 is classified as accrual because the business will be owing this utility business that $2,000. And the final one there is revenues prepaid. And that takes us to the end of our lesson on liabilities.
Like, share, and don't forget to subscribe.